Imagine waking up one morning, checking your investment portfolio, and seeing it down by 50% overnight. Panic sets in. What do you do? The stock market is unpredictable, but many experts are warning that 2025 could be a dangerous year for investors. Could we be on the verge of a massive crash? And if so, are you prepared? In this video, we'll discuss why 2025 might be a dangerous year for the stock market, what history tells us about crashes, and most importantly, how you can protect yourself and pay off your debts before it's too late. Welcome back to the channel. If you want to stay ahead in the financial game, make sure to hit that like button and subscribe for more valuable insights. Let's dive right in. The stock market moves in cycles, and history often repeats itself. The 2008 financial crisis, the dot-com bubble in 2000, and even the Great Depression in 1929 followed similar warning signs. Economists predict that 2025 could be another turning point due to rising interest rates, economic slowdowns, and global uncertainties. The US and global debt levels are at all-time highs. Governments have been printing money at an unprecedented rate, leading to inflation. When inflation rises too fast, central banks increase interest rates to slow it down, which often triggers a recession and stock market crash. Stock market bubble. Tech stocks and cryptocurrencies have skyrocketed in recent years, just like the 1999 dot-com bubble. Many analysts believe we are in a speculative bubble that could burst at any moment. Diversify your investments. Don't put all your money into stocks. Consider gold, real estate, bonds, or even cash reserves to spread your risk. Keep an emergency fund. Always have at least 6 months' worth of expenses saved up. This will help you survive if the market crashes and job losses increase. Avoid high-risk investments. If something sounds too good to be true, it probably is. Avoid highly speculative stocks, crypto, or over-leveraged investments. Prioritize high-interest debt. Credit card debts, personal loans, and payday loans often have high interest rates. Paying these off first will reduce financial stress. Create a debt snowball plan. Start by paying off small debts first while making minimum payments on the larger ones. Once a small debt is gone, move to the next one. This builds momentum and keeps you motivated. Do you really need that expensive subscription service? Cutting back on luxuries can free up cash to pay off debt faster. Increase your income. Side hustles, freelance work, or even asking for a raise can help you generate extra income to pay off debts quickly. 2025 could be a turbulent year for the stock market, but if you prepare wisely by diversifying investments, saving cash, and eliminating debt, you can come out ahead even in a crash. What do you think? Will the market crash in 2025? Let me know your thoughts in the comments. If you found this video helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update.